Okay, I think I can make a start now. Just some housekeeping first of all. If you look down on down in the panel, you can see that there's a question and answer section. So I've got two of my team are manning that. So if you've got any questions as we're going along, feel free to put in the questions and one of our team will answer. This is going to be a theme I'm going to come back to a few times. So just bear in mind that we don't know the detail yet. And so the answers we're going to give are going to be state of play now, and they will be erring on the side of caution. Because everyone's left it so late in the day, there could well be a period in January where the rules are going to be relaxed to enable trade to continue before any deal is actually ratified, if of course there's going to be a deal. But what we'll be doing is we'll be answering questions based on what we know now. So we'll be erring on the side of caution. There's a really good question in there about sales to the Republic of Ireland, which is a very interesting question that we were chewing over this morning. So it might be worth having a quick look at that. And what we'll also do at the end, I think we're going to gather up all the questions and stick them on a Word document, the questions and answers, and stick them on a Word document, and they'll be either distributed or will be able to be distributed by us at that stage. And finally, I think if there's anything that very interesting questions or questions that we want that someone thinks that we should be discussing more, those will be picked up during the talk as well. And if we've got time at the end, I'll be answering those directly. It has been a really weird year, and Brexit's only going to add to that. Actually, when I was out for a short run this morning, and I was thinking that most of us logging on today wouldn't even think it was weird that we were having an online video on Zoom. But actually, certainly for me, a year ago, that would have been very, very odd. Contrast that with the fact that I'm wearing a shirt and tie today, which I haven't worn for 9 months, I think. So, so times have been very odd the last year, and we've had Brexit bubbling along in the background. Of course, it's the 16th of December already now, and so it is extremely frustrating, I think, for everyone, particularly my team, that we still don't have the detail. Generally, when I suspect that in the background there's a load of information sheets covering every area of VAT and customs duty that are ready to be published once any deal signed or when they agree that there's a no deal. But we don't have that yet. So we've got some announcements that we've used, but we've also got best guesses, and so we've applied best guesses and the information where we know for certain. I will be mentioning that in the screen. So there's not much that we don't know for certain, but of course there will be some bits and bobs that are likely to change. Just a very quick introduction to me, because I know we want to get into the slides as soon as possible. I'm a partner in Joe Ludeman. I lead a VAT team. There's 4 of us in the VAT team now. I probably shouldn't say this, but actually, because it'll give away our ages, but we've got 125 years of VAT experience between the 4 of us. So either there's a really old person or we all divide equally, and I'll let you guess which. And actually, we've got 97 years of HMRC experience as well, which is some feat, and I don't think we've got a go clock between us. And something else I want to say just before I launch into the slides is that we're going to be talking about VAT and Brexit today, and we're going to be talking about cross-border issues. But in the background, there's something a bit more fundamental that's likely to happen. And again, this will be dependent on whether there's a deal or a no deal, and if there's a deal, what the small print is. But I suspect that the UK VAT system will change through the years, and diverge away from the EU. I don't know how much you got the audience would know about VAT UK law and EU law, but most VAT law is derived from EU legislation, and so you've got this overarching EU legislation, and then UK legislation can operate within certain boundaries generally, but can't go outside of those boundaries. Once we leave the EU formally, it is very likely that we'll be able to diverge quite a bit. So there could be some significant changes in UK domestic VAT legislation over the next few years. And one really good example, I think, of that is energy saving materials. So 3 or 4 years ago, if you wanted energy saving materials installed into your house, into your residential residential house, that would be at the reduced rate. So the services are putting that in, and the goods provided would be at the 5%. If you went out and you bought some energy saving materials, that would be at a 20% rate. The EU, it was contrary to EU law. So the EU law only allows the reduced rate to apply in certain circumstances and for certain parts of the population. So the EU said this was too wide-ranging to apply. So they started infraction proceedings, and clearly they won. So the UK then had to amend legislation to reduce the scope of the 5% rate. So effectively, most people are unable to benefit from the 5% rate applying to services and goods provided with those services. And of course, the 20% still applies to goods, because you can't reduce, you can't apply the 5% to the goods either. In these times of trying to get carbon neutral and of all our targets, you would think that this would be an area where we'd want to zero rate as much as possible. We certainly are not allowed to do that within the EU legislation now, but come 1st of January we can. So as I don't want to sound all Farage or Boris here, I don't want to also sound like I'm on the EU side. I'm just pointing out that actually come 1st of January, there are likely to be changes in the VAT world beyond just cross-border. So if we go on to what I'm going to be talking about today, what I'm going to do is I'm going to gently, it's going to be a gentle introduction, and we'll get more and more complicated. So we'll just talk about some of the concepts to begin with. Then we'll talk about services, because that's the most straightforward part of the changes that are going to happen. Then we'll talk about goods, a little bit more complicated, and then finally we'll talk about Northern Ireland, which really is a really weird one, and it's quite a difficult one for us all to get our heads around. But I know that it was agreed that the Northern Irish Protocol will remain regardless if there's a deal or no deal. So certainly for Northern Ireland, the rules that we'll discuss at the end are going to apply. So the Chinese curse, may you live in interesting times, is certainly applying to the VAT, for the VAT team. Not only on the 1st of January we got Brexit, but we've also got changes to the construction services and the introduction of a domestic reverse charge, which will mean that most construction services, the customer will be accounting for VAT on behalf of the supplier, but there will be exceptions. And we've also got, as I mentioned later, but we've got a second trigger point on the 1st of July next year, where some of the rules within Europe and some of the rules actually within the UK are also, VAT rules are also going to change. So we've got 1st of January where there's a fundamental change. We've got, I think it's the end of March where the domestic reverse charge comes in, and then we've got 30th of June straight 1st of July where there's going to be other changes are going to come in. So we're going to have a little bit of a roller coaster next year. And of course, we're probably going to have a budget at some stage as well. And I suspect that VAT will be tinkered with in the budget as well. So we've got we've had an interesting year this year for a number of reasons. Next year it's probably going to be even more interesting. And we've got Northern Irish Protocol as well, which a lot of the information is a little bit sparse and conflicting, but we do know it's actually it's going to come in. So we'll leave that to the last. And as I said once, I'll try not to mention it again actually, but I mentioned the devil's going to be very much in the detail. I said I know all the years I've been doing, doing VAT, and especially in the private sector where we look at budgets and then issue business briefs and that sort of thing, or issue information to clients afterwards, that you generally get the headline announcements and then you get a load of detail coming in from HMRC that's got a lot of devil in it. And so please monitor our website, because as soon as we get the information, and that might well be over the festive break, as soon as we get the information, as soon as practically possible, we will be amending these slides and issuing further information, and those will be available on our website. Who knows when that's going to happen? I mean, I would have said that you were mad if someone had said we still haven't had an agreement by this time. So it could well run now into the new year. Actually, and I wanted to mention this as a particular point, but there are issues of low value imports, which actually I'm going to mention briefly in here, and that's particularly going to apply to anyone who doesn't belong in the UK. And I know the vast majority of you are UK businesses, but I think there's one or two who are actually European or certainly non-UK businesses, and I'll mention that quite briefly because that's a fundamental change to the VAT import system that's coming in, and that's a definite. As I said, further announcement being made by the firm. Yeah, look, as our name suggests, we are the VAT team, and there's a lot of changes that I'm going to talk about in these slides that are happening. That VAT is an issue, but it's as much about customs declarations. Customs declarations is about VAT. We do have a broad knowledge of those sort of things, but we're not experts. And I think if there's something you can take away, you want to take away from, one of the things you take away from this presentation is that if you buy or sell goods into the EU and you don't do any business outside of the EU, so you've never come across proper imports and proper exports before, then it's get your VAT number, get an EORI number, but also find a good customs agent or talk to your freight forwarder who could see whether they can do the customs declarations for you. That's a really important point. Both those points. Get an EORI number. It's almost like a VAT number getting an EORI status, really. But getting an EORI number, which can take a couple of minutes, and find a way of someone dealing with the paperwork. As I mentioned already, there's two key dates to remember. 1st of January for the purposes of Brexit, 1st of January, 1st of July, and that's particularly going to apply to goods being bought and sold going across borders. And the 1st of July is an interesting one because there's some simplifications being introduced in the EU that we might better take advantage of. Again, I'll talk about that at the relevant time, but that's a nice little teaser. Yeah, as I said, there's likely to be a transitional. We think there might be a transitional period. We certainly think there's going to be a soft touch going to apply, but again, this is what our opinion. It's not a fact, but we think there's probably going to be a soft touch. I think everyone wants trade to continue, especially during these COVID times. People want trade to continue as seamlessly as possible. So I don't think anyone is going to try and put barriers in the way, certainly in the short term, because there's going to be enough disruption as there is. Okay, so we'll start with the easiest. The easiest bit, which is services. They're not going to be dramatically different. In fact, if anything, they're going to be simpler. So from the 1st of January, EC sales lists won't be required for business to business. Funnily enough, I've been speaking to clients over the last few months about the changes, and quite often I'll mention things that are changing and people didn't even know they had to do them in the first place. And actually EC sales lists are a really good example of that. So that's where you provide a service cross-border and you use your customer is in business and they've got a VAT number. What you do on your invoices, you put reverse charge applies. The customer then accounts for VAT on your behalf as appropriate. What you're supposed to do is complete an EC sales list for services. The thing is that because there's nothing on your VAT return to say that you're providing services to European customers, if you don't know you have to complete it, you won't complete it. EC sales lists are primarily for goods going cross-border, but of course there's a box 7, I think, on the VAT return for EU sales, and so as soon as you put anything in that box 7, you're asked to complete an EC sales list. Anyway, if you don't do them before, you're supposed to have done, don't worry, because you don't have to do them from the 1st of January. If we go to the last point, for intangible supplies, this is where I say it's a bit simpler, because at the moment, if you're a UK service business, like an accountancy firm, you've got 3 rules. So you've got your 3 rules depending on where your customer belongs. So if your customer belongs in the UK, you charge UK VAT. If your customer belongs in the EU, you've got to find out whether they're a business or they're a consumer. And best way of finding out if they're a business or not is, or using it for business purposes, I should say, is that they'll give you a VAT number, and you've got to do a VAT number, you've got to do an EC sales list. And if they're not a business, if they're a private consumer, then you account for VAT. You account for VAT where you belong, i.e. you account for UK VAT. If your customer is outside of the EU, under the current rules, you don't have to worry. If you're an accountant, you don't have to worry about if they're using it for business purposes or private purposes. You just don't charge VAT. It's outside the scope of UK VAT. We suspect, or our anticipation is, that from the 1st of January, supplies into Europe, you won't have to worry whether your customer is using it for business purposes or they're using it for private purposes. That is one of the ones where I'm a little bit worried about, because I can see distortion of competition happening here, that someone using an accountant, someone in France could use a UK accountant and not charge VAT if they're a private consumer, whereas they would get charged VAT by anyone within the EU. So to me, that's one of those ones that I would not be surprised if there was devil in the detail there. But at the moment, we have to work on the basis of VAT won't be applied. There's some other ones that will be affected. So we got digital supplies, B2C, they will be affected. That's the mini one-stop shop that we use in the EU. So that means if you're supplying digitally supplied services to consumers within the EU, the place of supply becomes where the customer belongs, which is a correct thing. I like the concept of that, because VAT is a tax on consumption, and so it should be borne where it's consumed. So when you've got digital service, things like apps is a really good example. Digital service, and your customer belongs in France if you're a UK person, and at the moment what you do is you sign up. You've got the choice. You could either register in France and charge VAT and charge French VAT to that one customer or whatever customers you've got, private consumer customers, or you can register for MOS, and MOS is a way of basically it's a return where you account for VAT to all the various EU countries at their rate, and the VAT's paid across to them. So it's very much a simplification type system. And remember MOS, because we're going to talk about MOS a little bit later. So that's going on the 1st of January. For digital services B2C to Europe, we can't take advantage of MOS. And of course, the same thing applies to European companies supplying digitally supplied services into the UK. Again, they won't really use MOS on the 1st of January, so they probably need to register they will need to register in the UK if they supply those sort of services. Yeah, services received from the EU, most services will remain the same. In fact, actually, services received from the EU is going to be even simpler, because you have to, now when you buy a service from the EU, if you're a business, then you have to complete box 1 and 4. You have to declare output tax on behalf of the supplier, as long as it's not an exception like land, and then you recover it. And that's the same for if you buy from outside the EU. It's the same. Most people don't realise that, or a lot of businesses don't realise that, but that is the case. So there's not going to be a great deal of difference buying services from the EU post 1st of January. And for businesses that incur EU VAT, they're going to have to apply direct to the relevant company, not through the portal, which is going to be, I'll talk about that a little bit later, but that's quite a new complication that's been introduced. And then we've got TOMS. I don't want to talk about TOMS too much. I know it's a big long slide, lots of detail on there. But TOMS is a simplification, and this is one of the worries about leaving the EU and the VAT changes, because the headline. I'll quickly mention about TOMS actually. So TOMS is called Operators Margin Scheme. So it applies to people who buy and sell certain designated travel services. And what it basically says is, look, if you buy a hotel, for example, you're a UK person, you buy a hotel from France, and hotel accommodation from France, and then you sell it on to a traveller, then the place to apply would be France because it's land, because it's a hotel. But actually, within TOMS, you only declare VAT on the profit margin. So if you're charged French VAT, you don't recover it, but you don't charge UK VAT on the entire supply of that hotel. You just declare the profit margin. So actually, it irons itself out, and it's the same as though you did recover the input tax and did declare the output tax. That's what happens in TOMS when you buy and sell within the EU, including the UK. When you're buying and selling designated travel services outside of the EU, the profit margin is zero rated. A lot of people think that TOMS is confusing or complicated, and it sort of is and sort of isn't. The complicating thing is it's very difficult to decide exactly how much VAT you should be declaring on your services, because a business is going to be buying and selling designated travel services to all sorts of people in all sorts of places throughout the year. And it'll be, and if VAT is calculated on the profit margin, it's almost impossible to work it out in real time. So what happens is, at the end of every year, you do a big calculation to work out all your travel services outside the EU, all your travel services inside the EU, what your profit margin on both of them were, and then you work out how much VAT you should have declared, and then you make an adjustment, which isn't an error. You just make an adjustment, and then you apply that percentage to the following year. 1st of January, supplies within Europe are going to be the same as supplies outside of Europe. So they're going to be zero rated, which sounds good, because that would mean that tour operators won't have to charge VAT. The problem is that that's a simplification, and we don't know from the EU perspective what's going to be happening, because the rules aren't fully harmonised. So post 1st of January, will UK operators have to register where they're making TOMS supplies in the country where they're making it? And I would say that probably is going to be the case. And so a way around that would probably be to register in one EU country and then to apply TOMS within that EU country. But we haven't had any detail on that. This is probably the most confused area of all. I suppose, looking on the bright side, because of COVID, one of the bright sides of COVID is that no one's going anywhere anyway. So these sort of things can be thought about, I guess, from the 1st of January. But this is one of the real unknowns with services. You know, I touched upon mini one-stop shop. So UK suppliers of digital services to EU consumers won't be able to use the mini one-stop shop on the UK VAT return from the 1st of January. So therefore, if you do supply those sort of things, I mean, most people actually supply them through a different operator like Apple or Amazon or big companies that actually do all this MOS or do all the VAT for them. So what they do is they act as principal in making the supplies to the end customer, and the supplier charges Amazon a fee, and treats Amazon as their customer, and they charge Amazon, depending on which Amazon that they charge VAT as appropriate, or Amazon do the reverse charge. And I guess the likes of Amazon and Apple take quite a nice big cut for the for dealing with the complications. But for those that directly sell digitally supplied services, they have been able to use a MOS return to charge VAT or declare VAT appropriately to all EU countries. So on the 1st of January, they're either going to have to register in a member state, one member state, and do a union VAT MOS, register in each EU state where they sell digital services or do a non-union VAT MOS registration. So there's three options. I mean, really, the first two are very similar. You're going to have to register the VAT effectively in Europe somehow and apply the MOS rules there. So I think for suppliers, it's UK suppliers, it's a difficult change, but it's a fairly straightforward one. I think for the European suppliers, it's going to be a bit more of a problem because they're not going to be able to apply MOS to UK. So they're going to have to register in the UK for a single VAT registration and apply the VAT as appropriate. Oops. Oh, what have I done here? Okay, and this is a really interesting interesting advantage or point that we're going to have. And again, it's one where I assume that this is going to be the case, but as I mentioned in the second bullet point, the Chancellor actually announced this on the 9th of November. So for financial services are generally exempt from VAT. And if something is exempt from VAT, then you basically subject to de minimis rules, you basically can't claim VAT relating to those exempt supplies. And again, we've kind of got three rules at the moment, very similar to the ones I mentioned before. For other types of services, we've got three rules. So if you're making exempt supplies, if you're UK, you're making exempt supplies to a UK person or business, then it's just an exempt supply and you can't claim back your VAT subject to the normal rules. If that person's in Europe, the supply is outside the scope of UK VAT, so it's technically not exempt, it's outside the scope, generally, if it's a business, but you still can't have the VAT because it relates to a supply that would be exempt in the UK. So when you're making a supply to an EU customer, you've got to think about not what the EU customer would treat as supply, because they do the reverse charge for you. So they declare VAT as appropriate in their country or they treat it as an exempt supply. You've got to work out what your supply would be if they belonged in the UK. If it's exempt, you wouldn't recover the VAT. If your customer belongs outside of the EU, you've got a VAT input tax specified supply rule, which basically says that you can recover that VAT even though it relates to an exempt supply. And the reason behind that is that the EU do not want to be disadvantaged when supplying services to non-EU businesses. So because the services are exempt in the EU, input tax isn't recoverable, what they don't want is to be disadvantaged when they're applying those same services to someone, say, in the States against another business that belongs in the States. So that's why EU is allowed to be recovered. Post 1st of January, the Chancellor has announced that for customers located in the EU, VAT will be recoverable on those supplies, which has come as a bit of a shock to me because that's not really much of a level playing field, and I'd be surprised if the EU would be particularly pleased about that. So I'm assuming that in the event of a no deal, that's definitely going to happen. In the event of a deal, slightly less so, just because it gives UK financial businesses a slight advantage over their EU equivalents. Okay, so we'll go. That's the easy stuff, and that's the services out the way. So there are fundamental changes to services, but not they aren't that complicated. Apart from MOS and TOMS and a few other bits and bobs, I don't think that they're particularly complicated. But if you're buying and selling goods to and from the EU, if you're buying and selling goods to and from Northern Ireland, there are going to be some major changes that you need to be aware of. I've said it before, I'll say it again because it's really important. EORI number, you've got to get your VAT number, EORI status. You've got to apply for an EORI number. My understanding is that everyone who's got a VAT number, HMRC automatically gave it EORI status. I would check. I would check to make sure if you do buy and sell to the EU or to Northern Ireland, you do actually have an EORI number. And Northern Ireland, confusingly, and we'll talk about it on the final part, Northern Ireland will need both an XI and a GB EORI number as well, depending on whether they're going to move goods to Great Britain or to the EU. Again, I mentioned this very briefly before, refunds of VAT in other EU countries. This is a weird one. It's almost like a closing of the circle that, I can't remember when it was probably about 2012, something like before 2012, you had to, when you incurred VAT in other EU countries and you were VAT registered in the UK, to recover that EU VAT, you had to apply to the individual countries in the language of that individual country, and you had to get a VAT certificate of status to show that you were VAT registered. And actually, an ex-colleague of mine, that was his entire business. That he had loads of contacts throughout Europe who would do this for him, you know, or who knew the languages. So he had ones in every country. And he made a reasonable living on that. And then overnight, it completely went, because they moved across to being able to recover EU VAT through the portal in the country that you belong. So it became electronically, so it became really simple to recover VAT in other European countries, effectively really one claim through your EU portal. That is now going. So for claims for 2020, you can do it electronically up to 31st of March, but post any VAT incurred post-January 2021, you've got to make that claim on EU in EU country in paper format. So it's going to be a lot more complicated claiming VAT back in Europe. You are going to be able to claim it. I mean, that's the old 8th directive, and there's a 13th directive as well, which is where you recover VAT in countries outside the EU as long as they've got a reciprocal arrangement. Well, we don't have to worry about the reciprocal arrangement in the EU, because we will be allowing VAT from VAT to be recovered for the EU. So you are going to be able to recover VAT still, subject to their rules, but it would just be a lot more complicated and probably a lot slower. If anyone's made those VAT reclaims, you think, well, could it be any slower? But I think it probably will be. And the retail export scheme, that ends in Great Britain, and I'm not going to apologise for using Great Britain now, because some of these slides changes are only going to apply to Great Britain, because it's going to continue in Northern Ireland. So retail export scheme, for anyone who doesn't know about the retail export scheme, that is where if you have a non-EU traveller who buys goods in the UK and the shop that they buy them from operates it, because it's not obligatory, they operate the scheme, they can recover the VAT less some admin charges on the goods that they buy, as long as they fulfil certain criteria. They basically got to leave the EU within, I think, 3 months. They've got to present their details at the border and that sort of thing, but it's fairly straightforward exercise. Anyway, that's going from the 1st of January. And again, I had a client who was developing an app that simplified VAT claims, so that if you had one traveller going to multiple stores in the UK, his app would basically amalgamate all those claims into one and make it a lot simpler. His business went overnight, because it's going. And you can see why, actually. You can see why, because you can't differentiate between EU and non-EU post 1st of January. So if you had the retail export scheme and it's still carried on, 1st of January, people from Southern Ireland, people from France could come into the UK, buy goods and get them VAT free, which would be, I assume, that they decided it was a bit of a drain on the chancellor, so it's had to go. Probably doesn't affect many of you, but actually it's a really good example about the minutiae that's happening, the changes that are happening on the 1st of January that you wouldn't really even have considered, 5 years ago. So let's look at imports. So appoint a customs agent if you have an import. Again, I'm sure I've said it probably enough now, but EORI number. There are some strange rules coming in. So businesses can declare and reclaim import VAT on their VAT return, called postponed VAT accounting. They can do that, although you've got to apply to the Customs Declaration Service. And actually, as I said, we've been trying to try one to see how well it works, and it hasn't worked yet. The site isn't working. You know, it's only the 16th, by the way. You know, they've got plenty of time. And the really annoying thing is that we've done the complete application. That's quite a few pages, and then it says it's not working, throws you out, and then you lose your application as well. Hopefully, this is going to be resolved shortly. Of course, you can still you have to apply for that if you don't want postponed VAT accounting. You can still use a C79 in the same way. I think the problem with that is that if you're buying a lot of stuff from the EU, then that's quite a hit. That could be potentially quite a hit to cash flow. There's also simplified declarations as well. So again, that's coming in. That's coming in 1st of January. It defers import duty payments for 6 months. Well, that could be really good if there's no deal. If there's a deal, well, it's not needed. And the problem with simplified declarations is that only kicks the can down the road, because from the 1st of July, you actually have to do full declarations for that period anyway. So in a way, you're going to fill out 2 forms, a simple one, and then before the 1st of July, you've got to do full supplementary declarations and backdate them. So again, we don't think that is something that's worth taking up. I wouldn't be recommending that, but you know, maybe for some people it would be a good idea. Yeah, so we recommend a duty deferment account. It used to be that HMRC demanded a bank guarantee, but we've been able to get 1 or 2 recently without a bank guarantee. So it may be that internally HMRC are relaxing their stance on that, maybe because they realise how important it is that people are able to import without fuss. Unfortunately, Intrastat declaration is still required. I would never have thought that would be the case, because Intrastat is very much a European thing, but they still are, unfortunately. And this is a really weird one. For consignments not exceeding £135, I'm going to amalgamate these two paragraphs. For ones underneath that, I think what's going to happen is that they're not going to be even looked at. So, I mean, I'm not sure how you can look at something if you've got a figure there, because you're going to have to know how much it costs to know whether you don't apply VAT. But anyway, any consignment less than £135 is not going to attract VAT on importation from the EU or outside the EU. What's going to happen is that if it's B2B, so if you've got a business in the UK that's buying these goods, they'll be accounting for VAT as a reverse charge, a little bit like the postponed accounting, but you don't have to apply for anything. It'll be automatic. You won't get charged, and you should remember to account for VAT on output tax and claim it back as input tax. But for consignments from non-UK suppliers to B2C, so that should be B2C, that 4th bullet point, VAT still has to be declared. And actually what's going to happen is that the non-UK supplier is going to have to declare UK VAT on that. We think this is mainly targeted at online marketplaces. Again, a bit like I don't keep picking on Amazon, but they're the most famous ones, Amazon. So if you sell goods through Amazon into the UK, the HMRC have said that Amazon are the ones that are going to have to monitor and police it on behalf of their suppliers. If you don't have an online marketplace, you're going to be required to register in the UK, even if you only sell 1 item of £100. How HMRC are going to police that, I don't know, but with a great deal of difficulty, I would have thought. So that's why I suspect it's mainly targeted at online marketplaces, and others are likely to be treated with a light touch. Bear in mind, there is funding available for training. I don't know if we've got the links to the funding on our website, but if we haven't, I'll make sure that they're up, because if you have to if you have to get training, there is a great deal of money available to businesses to train staff, running into thousands of pounds. So it's worth looking into that if you feel as though you're going to have to change some of your procedures, or certainly train some staff to deal with these fundamental changes, particularly if, as I said, you don't normally buy and sell outside of the EU, so you've been brought up just in a single market and don't know anything about customs declarations, which is really applies to probably quite a few businesses out there. Exports, there's no interim measures. Again, appoint a customs agent to complete the declarations. Again, make sure you've got an EORI number and you've got a commodity code. The rules are simpler in a way, because you can zero rate goods to the EU, either B2B or B2C, doesn't matter. For those of you who sell goods to consumers now, you'll probably be aware, I'm going to talk about this in the next slide, I think, but aware of distance selling stuff, but that's gone. But bear in mind that VAT and duty, certainly VAT, is likely to be required at entry into the EU, but not on low value items. And there's a change, again, I'll talk about it a little bit later, a change coming in on the 1st of July. Intrastate declarations aren't going to be required for exports, so that's consistent, isn't it? So you need it for imports, but you don't need it for exports. And again, you can obtain funding for training. So distance selling is for the UK is ending. This all really revolves around whether the importer of record or not. So if when the goods cross into the EU, if the supplier puts themselves down as the importer of record, then they are making a supply in that EU country, would have to register. And there may be, if we switch on to the 5th paragraph, there may be then a requirement to appoint a fiscal representative. In those cases, some countries are you're required to do it, and some countries you don't. So Italy and France are two examples where they insist on it, and the Republic of Ireland, apparently they don't. And service providers like Amazon and actually Avalara would take care of this for you for probably a reasonable amount of money. So what we recommend here, or what we've been recommended to clients, which works, is that if they're selling to private individuals, they stick the private individual as the importer of record if they feel as though the goods are going to be stocked at customs, but they pay VAT on behalf of that customer, just to make sure that they build it into the sale price, because the sale price, remember, is going to be going from, if it was 120 quid, you'd have declared £20 of VAT potentially beforehand, but actually you can still charge them £120, it'll be zero rated in the UK, and assuming that the VAT in the country where you're selling to is the same as UK, you'll just pay the £20 VAT when it crosses the border on behalf of the customer. That's the way we think it's going to work. But there's a thing called the import one-stop shop, which is a little bit like the mini one-stop shop, that's going to start from the 1st of July for B2C supplies. And that's the big change, really, that's going to be, and the full declarations, customs declarations that we talked about for imports before. Those are two big changes that are happening on the 1st of July. And so we're going to be releasing more information on how to register for the import one-stop shop between January and hopefully March to show how to do it. But that would be a way of really simplifying sales to the EU. Okay, so this is the final bit, Northern Ireland. This is going to happen regardless of a deal or no deal. The UK agreed to that a week or two ago. This is a really weird one. I don't want to spend too long on it. I know that time's a bit short and my throat's going, and it may be that a lot of you don't deal with Northern Ireland, but I think this is quite a good window into some of the complexities that we're going to have with Northern Ireland in particular, but with the EU in general, I think, about the changing relationship. And I will mention this analogy, even though I think a few people have looked at me blankly when I've mentioned it. But this Northern Ireland reminds me of the film A Fistful of Dollars, in that at the beginning of the film, he's got the Rohos on one side and the Baxters on the other side, and he's in the middle. Clint Eastwood's in the middle making a lot of money. And then at the end of the film, I think he's got the Union soldiers on one side and the Mexican army on the other side, and he's in the middle. And that's a little bit like Northern Ireland, that when I was doing research for Northern Ireland, and we only did that a month or two ago because there was no point looking into it if it wasn't going to happen. When I started looking, I thought this is actually quite good for a Northern Irish business. For me, for GB, it's quite complicated, but for Northern Ireland, sitting effectively within the EU single market and the EU customs union, but at the same time remaining part of the UK VAT system, means that they've almost got the best of both worlds. I think the key point to take from this is that Northern Ireland will attract different rules from the rest of the UK, especially with goods. This bit here is actually probably for the staff of the firm, but actually applies to clients as well. We recommend that any questions refer to the VAT team about dealing with Northern Ireland, because there are some oddities. Northern Irish businesses will be able to take advantage of EU simplifications, such as triangulation. I haven't spoken about triangulation, but that's going for services, and that's where you can avoid registering in an EU country where there's a triangular transaction, so the goods move from one country to another, but the invoice goes to an intermediary, and the intermediary can avoid registering in a different EU country as long as the goods cross border and the VAT number of their customer is different from their VAT number. That's all going for GB businesses, but for Northern Irish businesses, triangulation remains. They can still use the EU export scheme, and they can still use the EU refund scheme. Northern Ireland will have unfettered access to goods moving into the UK. There'll be no import or customs checks. There'll be no duty, no tariffs, no regulatory checks. The second-hand margin scheme will apply for Northern Ireland to the UK. Second-hand margin scheme is where cars is a really good example. That second-hand cars, generally that isn't on the full selling price. It's only on the profit that the second-hand car dealer makes. That's going to apply for the second-hand margin scheme between Northern Ireland and, actually, I should say that's wrong. It should be Great Britain, not Northern, not United Kingdom. And the supplies of goods to the EU will also remain unchanged. So there's no tariffs, no distance selling. There'll be nothing for exports for Northern Ireland. I think importantly, Northern Ireland will have unfettered access for goods going into Great Britain, and they'll also have unfettered access for goods going into the EU. For imports, so Northern Ireland, not only are they in the EU single market, but they're also in the UK customs territory as well. So they're in both the EU customs territory, EU customs union, and the single market. The goods from the UK, GB, will not have tariffs applied. Northern Irish businesses are going to have to apply an XI number, EORI number, to sales from there to other EU states, but they'll apply a GB1 for ones to UK. But the second-hand margin scheme will not apply from UK to Northern Ireland. So that's that example of the car, which would be a second-hand scheme item. You only have to declare VAT on the profit margin. If you're moving the car from GB to Northern Ireland, you will have to declare VAT on the full sale rather than the profit margin. That might be a very minor point, but I think it really shows the difference between Northern Ireland and the rest of the United Kingdom. And also, because they can do the other way around, it applies going into GB, the difference between Northern Ireland buying stuff from GB and selling stuff to GB. Really importantly, if you do trade with Northern Ireland, there's a trader support scheme that that's designed to help businesses comply with the rules. And it's an HMRC thing, so it might be a little bit clunky, but they do actually help you complete declarations. They even complete them on your behalf, apparently. So that's, if you do them, I would recommend contacting them. Services, I think the services remain very much unchanged. Services to Great Britain will attract VAT, service to EU will follow the current rules. So for Northern Irish accountancy business, you'll have an extra set of rules sort of. It'll be quite a strange thing for an accountancy firm, I would have thought. You'll charge UK VAT to UK. No, actually it won't be any different with it. So actually in a way for Northern Ireland it won't be any different because they're still being a single market. And there'll be no reverse charge for services from Great Britain apart from DRC, and the reverse charge will still apply to services from the EU. But as we mentioned earlier in slides, probably feels like a long time ago, the reverse charge really isn't really going to change much difference for purchases anyway. So look, let's look at the summary. There's going to be a lot of changes on the 1st of January. I think most of it is going to involve additional paperwork and extra compliance costs. But I don't think you can ignore the fact that you may have to register in EU countries, especially if you become the importer of record. I think in many cases the VAT rules will be simpler because you only have to consider UK to the rest of the world rather than the EU and rest of the world. There's a potential win for financial services. I'll believe it when I see it, but that's the state of play at the moment. Goods, especially B2C, are going to be most affected. And I think the biggest problem is going to be occasional suppliers. I think for people who very rarely do this, that's going to be a big headache because I think we've all been spoilt dealing with the single market over the last 30 years, almost 30 years, I think. And please treat today with caution. Most of the stuff I've mentioned will happen. Some of the stuff like VAT on financial services, and place supply of intangible services, not worrying about B2B or B2C. We await the detail on that because I think it's probably too good to be true. But we await the detail, and as soon as we know, we will be put it on the website, even if it's a couple of lines over Christmas. Christmas morning, I'll be opening my presents, but also looking out for information sheets from HMRC and be updating the website as soon as we can.